Today, we will discuss a situation faced by BiancoTech S.p.A., an Italian company based in Turin that markets high-precision electronic products. Hi, this is Group 8 of Tax Professional at the SAA University of Management in Turin. Together, we will guide you through the case of BiancoTech S.p.A., which in 2023 underwent a major restructuring within its multinational group. We will be analyzing the potential transfer pricing implications of this restructuring, with a focus on the importance of proper documentation.
As part of restructuring in 2023, BiancoTech's production function moved to a sister company, Irish White Tech. Located in Ireland, this strategic move aimed to centralize production within the group for the European Union. Additionally, sales function were consolidated under another Irish company, Irish White Sales. This company assumed responsibility for establishing product strategies and managing overall sales for the group. As a result of this change, BiancoTech's role shifted. They signed a commission agreement with the Irish White Sales. Under this agreement, BiancoTech essentially transferred its customer list to Irish White Sales without any upfront compensation. However, they are entitled to a 10% commission on the sales generated by Irish White Sales, in Italian priority. It's important to note that BiancoTech no longer has its own production staff following the restructuring and relies solely on this commission for income. Now let's discuss transfer pricing. Transfer pricing refers to the pricing of transactions between companies under common control. Both BiancoTech and Irish White Sales belong to the same multinational group. Transfer pricing ensures that these related parties conduct business with each other at the arm's length, meaning that at prices that would be charged if they were dealing with completely independent companies.
Here is where documentation comes in. Following OECD guidelines and Italian Revenue Agency regulations, companies engaged in related party transactions are required to maintain comprehensive transfer pricing documentation. This documentation serves as evidence that the prices set for these transactions reflect arm's length conditions. There are two key components of transfer pricing documentation. Master file. This documentation provides a broad review of the multinational group, its transfer pricing policies, global allocation of income, and economic activities. It's typically prepared annually in English, but an Italian version must be presented to authorities if requested. Local file. This file dives deeper into the specifics of BiancoTech's situation. It should include a detailed description of the commission agreement with Irish White Sales Ltd, a functional analysis outlining the functions performed by BiancoTech, for example, customer relationship management, marketing, and an economic analysis demonstrating that the 10% commission rate reflects arm's-length pricing. This local file needs to be prepared annually, updated for the most recent fiscal year, and crucially must be in Italian. Failing to maintain proper transfer pricing documentation can expose BiancoTech to several risks: transfer pricing adjustments, penalties and fines, and increased tax liability.
Let's emphasize the importance of proper documentation by focusing on what's at stake. Imagine the Italian Revenue Agency audits BiancoTech without documentation demonstrating that the 10% commission reflects arm's length pricing. They may adjust the commission rates. This could lead to a higher taxable income for BiancoTech and potential tax liabilities. Impose penalties. Italian authority can impose significant penalties for non-compliance. The combined effect of these options could result in a substantial increase in BiancoTech's overall tax burden. Now let's shift gear and discuss how BiancoTech can achieve arm's length compensation for their commission arrangement. There are three main methods. 1. Comparable uncontrolled price method. This involves finding similar transactions between unrelated companies to determine a market-based commission rate. 2. Profit split method. This method divides the combined profits from the sales activity between BiancoTech and Irish White Sales Ltd based on their contributions. 3. Cost plus method. This method adds a markup to BiancoTech's cost associated with the commission agreement to arrive at an arm's length price.
Choosing the most appropriate method depends on various factors, including the function performed by BiancoTech, the risk they assume, and the economic condition in Italy. Recent job losses at BiancoTech might also raise scrutiny from tax authorities. Methods to determine proper arm's length compensation for commissionaire arrangements. Based on Article 9 of the OECD Model Tax Convention and Italian Revenue Agency documents, several methods can be used to determine the proper arm's length compensation. For BiancoTech commissions arrangement with Irish white cells, we assume one method as an appropriate usable one. Comparable uncontrolled price (CUP) method. The CUP method involves comparing the price charged in a controlled transaction between related parties to the price charged in a comparable uncontrolled transaction between independent parties. The objective of this method is to determine that the price in the controlled transaction is compatible with the prices in unrelated parties that are under similar circumstances.